last section here in chapter 2. Can you believe it? You're already through 2 chapters. Well, you're through listening to me talk about 2 chapters. All right. So, interest and tax penalties. Like I said, they've got all different types of penalties. And then if you are late in paying those penalties, or if you are late in paying the tax, they will assess interest on both the penalties and the tax. So, and this of course is to encourage people to pay what they owe on time and in full, provided they can. So, there's details in here about the different types of penalties and how they're calculated. These are not the only penalties that there are. There are other ones, but these are the most common ones. So, interest charged on assessments. So if the IRS deems that you have underpaid your taxes and they send you out a notice, they can also add interest to that tax amount. So you made a mistake or something and you owe tax on it as a result of that mistake, then that's an assessment. If you don't file your tax return, you just don't file it, and you were supposed to. There's some people that don't have to. But if you were supposed to and you didn't file a tax return, there's a penalty for failing to file a tax return. The other thing that filing a tax return does is it starts the statute of limitations, which generally runs for 3 years, that they can go back and audit you and impose an assessment. So, and if you never start that clock, that 3-year clock, then it never ends. So that's another good reason to go ahead and file those tax returns, because after 3 years, then they won't come back. Well, unless it's fraud, unless there's some fraud that has happened. So failure to pay the tax. So you know that you filed the return, you owe the tax, you just didn't pay them, you'll get a penalty for that. Failure to pay estimated taxes. If you were supposed to pay estimated taxes and you didn't, then you'll get a penalty for that. Substantial understatement of tax liability, and this is for accuracy related, not for fraud. That's a specific type of penalty. They have enhanced penalties for fraud, where you intentionally misstated your tax liability or understated your tax liability. Erroneous claim for a refund or credit penalty. So, and this happens actually a lot, especially with those refundable credits: earned income credit, child tax credit, American Opportunity Credit. Those are the 3 refundable credits. Happens frequently because, I mean, it's like, I don't want to call it easy money, but filing a claim for it, even if you don't have tax liability, you're getting cash back. So that would be an erroneous claim for a refund or erroneous claim for a credit that you were not entitled to.
Does that one fall under like family members claiming family relatives or children as their dependents to get that refund?
Yes, that would be an erroneous. You can see actually several of these can be combined together. So if you were supposed to pay estimated taxes and you didn't file your tax return, and also you didn't pay any tax because you didn't file that tax return, and you did it on purpose, you see these can be multiplied. You know, they can just stack up on top of each other. How do I do this? Most taxpayers are under the false impression that filing a tax return extension also delays the payment of the tax. It does not, as I had mentioned before. So you have to make an estimate of what you're going to owe before you do that. And what I would always do, and I have a lot of clients who file extensions. Filing an extension they were always concerned that filing an extension would make them more apt to be audited, and that is not the case. Extensions are filed all the time and for very legitimate reasons. Sometimes you just don't have all the information. A lot of people, especially people with investments, they may not get information about those investments until after the filing deadline, the individual filing deadline. If they own another company, one of those flow-through companies, those companies have their own deadlines, but those companies can extend their tax returns too. So if you own an S corporation that doesn't file their taxes until September 1st, and you are expecting what's called a K1 form to show what your portion of that is, you don't have it April 15th, so you've got to file an extension at that time. It's much worse to file a return erroneously than to file an extension. Like say, well, we'll just put down what we know now. No, you'll file an extension for it, because you do not want to knowingly file an erroneous return. But so the extensions are perfectly legitimate. I have an extension right now. I just didn't have all of the stuff ready by the time it was April 15th. I still have to file my return. I paid the tax though. I estimated and I overestimated what I thought I was going to owe. So chances are I'm going to owe less than what I told them and the money that I gave them, and then what I'll do is I'll just have them keep the rest for next year. But it doesn't. It's not something. It's not an audit trigger, filing an extension. Usually, I mean, there are tons of legitimate reasons to file an extension, and we filed them all the time. But to file an extension, you do have to essentially estimate what that tax is going to be anyway. So it doesn't really, in most cases, it doesn't save you any work, because you're still going to have to do the calculations by April 15th in order to determine if the client has to make a payment along with that extension so that they don't get assessed a penalty for underpayment. So these are the interest rates. So you've still got the tax that's due. You may have some penalties as well. And then on top of that, depending upon how long you owed the money, they're going to charge you interest on top of it. Now, the good part is that if the IRS owes you money, they will also pay you interest on that, which then the next year they tax you on because it's interest income. So, but these are the percentage rates. You can see how they've changed over time. So we were at 3 in 2020, and then we were at 7. I don't know what it is this year. It's set each 6 months. So when this was published, we didn't have the end of 2023 number, but it's based on inflation. All right, so failure to file a tax return. If you do not file a tax return by the due date of the return, plus extensions, if you filed an extension, you must pay a failure to file penalty. Penalty is 5% of the amount of tax due on the return if the failure is less than 1 month. For each additional month or fraction of a month, the IRS will add an additional 5% penalty up to a maximum of 25%. Any income tax return not filed within 60 days of its due date is subject to a minimum penalty of whichever is less, $485 or the amount of tax that was required on the return. That's just the penalty though, so you still have to pay the tax. We're just talking about the penalty here. If it's due to fraud, the penalty is 15% a month, up to a maximum of 75%. The IRS calculates the penalty on the tax liability shown on the return, reduced by any payments made by withholding estimated payments or credits. All right, so here we've got Ralph. He was extremely busy during April, forgot to file his return. By April 18th, he did not file an extension. He finally filed his return on June 1st, 2023. Okay, so not that late, but he had a remaining tax liability of $2,000. He has a $200 failure to file penalty, which is calculated, by, so 2 months. So remember, it's 5% the first month, 5% for each portion of the next month. So it was due April 15th. He filed it June 1st. So April to May 15th, and then May 15th to June, that's 2 months. So 10%, $200. If there was reasonable cause, the IRS may abate the penalty. This was a big part of my job too. was writing the IRS letters, which I hear these days they really don't answer because they just don't have enough people. Writing the IRS letters and requesting an abatement of penalties. Usually if it's your first time, they'll give it to you. I kind of depend, I mean, fraud, they're not gonna give it to you. But usually if you have a good reason, I totally screwed up, and it's your first time, usually they'll abate those penalties. They won't abate interest though, they'll still charge you the interest. And of course you always have to pay the tax, that's always due. If after showing that ordinary business care and prudence were exercised in providing payment of the liability tax, taxpayer was nevertheless unable to pay the tax or would suffer an undue hardship if it was paid on the due date, then reasonable cause occurs. It was a choice between paying my taxes and feeding my family. That might be a reasonable cause, right? It's on a case-by-case basis. Next one, failure to pay tax. So failure to pay and failure to file are interrelated. Failure to pay penalty is 0.5% of the tax shown on the return for each month or fraction of a month that the tax is unpaid, up to a maximum of 25%. Failure to file penalty is reduced by the failure to pay penalty when both apply. So in this case, they actually don't double it up. Other cases, they do double it up, but in this case, they don't. So the maximum monthly penalty is 5% when both penalties apply. They will also abate if there's a reasonable cause. They'll presume a reasonable cause if both of these conditions apply. The amount due with the tax return is less than 10% of the tax shown. Balance due on the return is paid with the return. So if same facts, Ralph is still going to owe the same amount because he's already paid the failure to pay penalty. If he already paid it though, then he would be assessed that additional failure to file penalty, which is entirely possible. If he didn't owe the money, but he just didn't pay or he didn't owe the money, but he just didn't file the return, didn't bother to file a return, which happens. I'm sorry.
Is there a limit, like when people don't, like somebody worked like at somewhere for like, I don't know, 2 weeks or something, and then they quit, and then they get that W-2 for that little bit of tax. And then they don't file it or like with their income tax.
Yeah.
Will they come after? Or
well, it depends on whether they were, because of their income and their filing status and everything, if they were required to file. If they weren't required to file, then there won't be any penalty for it. Like if that was their only income and they earned a couple $1,000s and they wouldn't have owed any money. Like because it's standard deduction, it doesn't, then they're not required to file that tax return. Yeah, but if they were required to file, it wouldn't matter whether it was what period of time they worked or, yeah.
So in the book, it says that their failure to pay penalty is 0.5% of the tax shown on the return. Is that the tax liability or taxes due?
The tax due.
Okay.
Yes,
Fine.
they're not gonna penalize you on what you've already paid.
Okay.
Yeah.
All right.
Yeah, so it's always gonna be the amount due. Yeah, good questions. Any others? Okay. Let's see, what am I at here? Oh, this is just Ralph. Again, so this is, holy cow, what have they done here? Ralph does not file his tax return until December. The $2,000 tax due is more than 10% of his total tax shown on the return. Remember, to not have that additional penalty, it still has to be under a certain threshold if it's less. So Ralph would be subject to both the failure to file penalty and the failure to pay penalty. Because the return was due October 15th, that was the extension deadline. Failure to file penalty runs from October 15th to December 1st, 2 months. But the $2,000 is more than 10% of the total tax. The failure to pay penalty runs from April 15th to December 1st. Because remember, you have to pay it by April 15th. But if you file an extension, you don't have to file it until October 15th. So the penalties would be calculated differently based on different periods of time. So there's the calculation there. I'm not gonna. So in total, he's gonna have to pay, so these are his penalties. So he does get, for the 2 months, he gets credit because of that overlap between October and December, those 2 months, for those 2 penalties. But the failure to pay penalty was started April. So it's you only get the benefit of not having to pay both penalties during the times that both penalties apply. Does that make sense? The failure to file penalty didn't start running until October. The failure to pay penalty started running April. So from April to October, or April to December, he's got the failure to pay penalty, but only from October to December, he has the failure to file penalty, but during that time, they're not gonna double up both penalties. Does that make sense? Anyway, that's what he is. All right, so penalty for failure to pay estimated income tax. So if you were supposed to pay estimated taxes and you didn't, in order to avoid it, the taxpayer must pay during the year, either through withholding or estimated payments, a minimum of, and these are the same thresholds that we talked about earlier. So 90% of the current year or 100% of the prior year's tax liability. If the AGI in the prior year is less than 150,000, or if it was over 150,000, then that increases to 100% and 110%. There is no estimated tax penalty though if the total amount due is $1,000 or less. Okay. IRS calculates this penalty on a per quarter basis using the same rate at which it charges interest. So essentially they're charging interest on it. All right, so those are like failure to file, failure to pay penalties. Now we're assuming, okay, you've paid and you filed, there are penalties for accuracy or for inaccuracy, I should say. When negligence or substantial understatement of tax occurs, they will assess a penalty equal to 20% of the tax due. So you filed it and you paid it, but you were really sloppy with it, or you did it on purpose. You left off W-2 income of $20,000, then they're going to charge you 20% of the tax due. Negligence includes any failure to make reasonable attempt to comply with the provisions of the Revenue Code, careless, reckless, or intentional disregard for tax authority. They can waive it if the taxpayer makes a good faith effort to comply. So, for example, leading off that W-2, if you never got it, right, you could make that argument that I never received it. Although, if it's a significant amount, probably should have known that you were supposed to get it, but, you know. So if the taxpayer were to take a position contrary to established law, then there's a form that they can use to disclose the contrary position to help avoid the negligence penalty. So if you're going to make it's kind of like, there are these laws in Iowa with regard to drugs, tax stamp laws. So if you are arrested for dealing drugs, you won't only get charged for the possession and the intent to deliver, you're also going to get a tax charge on it because you are supposed to pay tax on it. Even though if you actually filed for the form and paid the tax, that would alert the state that you are engaged in these illegal activities. So this is kind of like the same thing where you can take this contrary position, but you've got to tell us about it. So essentially you're giving them the evidence that they need to prosecute you, right? Anyway, so but you can avoid the penalty. You're still going to pay the tax. You're still ending up in the same spot as you were before. 20% penalty also applies when taxpayers substantially understated tax. This occurs when the understatement is either more than 10% of the tax required or $5,000 or more. I don't know if it's the lesser of the two. Anyway, let's see. They can reduce the penalty if the taxpayer has substantial tax authority for the tax treatment. Only exists if the weight of tax authority supporting the taxpayer's treatment is substantial in relation to the tax authority supporting the IRS's position. So this is where you would hire an attorney to defend you, right? And go through all of those cases and everything to prove that you are in the right and the IRS is in the wrong. And yes, it does happen. Fraud penalties. 75% penalty on any portion of understatement of tax that is attributable to fraud. Fraud isn't really defined, but the courts have said that it's intentional wrongdoing with the purpose of evading tax. Or the intent to conceal, mislead, or otherwise prevent the collection of tax. I was just thinking, we're all trying to not pay tax, right? But I guess it's the intentional wrongdoing part. So if any underpayment is due to fraud, there's a 75% penalty and probably criminal charges. So tax evasion is the attempt to evade or defeat tax. Tax will always win, you will not defeat tax. Willful failure to collect or pay tax, willful failure to file a return. There are also criminal penalties in addition to civil penalties. These are some of the possible criminal charges. Any person who willfully attempts to evade or defeat tax, felony punishable by fines of not more than $100,000 or imprisonment of not more than 5 years, or both. Failure to collect, account for, and pay over any tax. So that would be like withholding, employers that don't like withhold, or they withhold it but they don't then pay it. Penalty again, felony punishable of fines by not more than $10,000 or imprisonment of not more than 5 years, or both. Willful, any person who willfully fails to pay estimated tax or other tax and file a return. Misdemeanor, punishable by fines of not more than $25,000 or imprisonment of not more than 1 year, or both. Erroneous claim for a refund or credit is a 20% penalty. Also, like if you claim the child tax credit, any of those refundable credits, and you aren't entitled to, you're not allowed to use them again for like 3 years or something like that. Even if you're entitled to them, and during those times, you can't use them again for a while. All right, those are our penalties. Questions?
Will we have problems like that, like where it's like a paragraph of information?
I think you maybe do have, so read carefully those calculations. Yeah, because it can be a little tricky. Yeah. I don't think they make it too overwhelming. The funny thing is, they give you all this information, but it's the IRS that does the calculations if you owe a penalty. A lot of tax problems will also, or tax software can also help to calculate those. Speaking of tax software, so there is